Hi, thanks for joining me on my Market Report. My name is Mike, and my Market Report is on mortgage rates. We get into discussing what's impacting mortgage rates on a daily basis. Sometimes it could come from economic calendar or a combination of that with the headline news or geopolitical. But it get really confusing out there when good news is bad news because the market sentiment changed, and somebody who might be on the sidelines may not understand what's going on and may need further explanation of what's going on in the minds of what the markets are doing. So we try to here to give that information to you, so that way, if you're looking to refinance or purchase and looking to go ahead and are just kind of watching rates, hopefully this will give you the information you're seeking to help you make an informed decision for yourself. But more than that, uh, this will hopefully give you some ideas of where the markets are moving towards, and hopefully give you some more information about what's going on in the mortgage rate industry uh, sector. A little bit about myself is my name is Mike. I do work with a national lender, so we lend in all 50 states. If you guys got any questions about anything, we're here to help you guys out. If I can be of assistance for any help you with any purchase or refinance needs, we'd love to earn your business, so please reach out. Uh, so without further ado, we'll just jump right into it. We'll start off with the economic calendar. We get this report, it's a binary report. It's not something I normally go over, but I kind of glance at. It's brought to you by the MBA, and it's called the Mortgage Loan Activity Report. It just basically lets you know if the activity levels are up or down from week to week. Kind of gives the idea if if refinance are increasing or increasing or decreasing. Same thing with the purchase contract. So if we're seeing a high increase in purchase, then obviously we know that home sales are picking up and stuff. So here's the breakdown of the purchase and the refinance. As you can see, the purchase side dropped, and then same thing with the refinance. Even though we had a drop in rates, uh, that still doesn't seem to matter here. So lastly, or not lastly, I guess we got one more item after that, but we got the ISM non-manufacturing PMI for the month of June. Anything above 50 is considered expansion. So in this here, we had a 55.9 back in April. I'm sorry, not April, back in May. Forecast is supposed to dip a little bit to 54.3, and it did dip a little bit, but not quite as much as what the forecast come for at to 55.3. So this is something we'll keep an eye on. We do like to see what's going on with the services industry. Um, Obviously, that's an important component, as well as manufacturing. So let's go ahead and take a look here at the mortgage-backed securities. Mortgage-backed securities are down by 61 basis points. So we're off from the lows. Obviously, we touched off the 25-day moving average and did pull back a little bit. Now, what's going on? We did have the Fed minutes released just shortly a little bit ago, and that's why I kind of waited on the video not to go too early, because I figured we'll wait till the meetings, the minutes were released. This is from their FOMC meeting back in June. And what happened was that basically it's the same thing what they've been saying all along. They may come out with more restrictive measures uh, if needed, if inflation persists. So at the upcoming meeting in July here, 50 and 75 basis point hike is definitely on the table. Um, Stocks were down, now they're back in positive. So what's going on here is we actually worsened. We were down around 40 basis points, and when that came out, it just kind of worsened. We were down like 75 at one point. Now we're down about 61 basis points. And basically, it's a liquidity issue. So we're seeing money flow from the bond market back into the equity market. So they must have felt calm enough to know that we would go ahead um, and they must have liked it enough where they're going to go ahead and put money back into the investments. But also, it's been taking a bit of a beating, so they're also buying on the low end. As people kind of pulled out of the market, they're buying at the low end. So we could see differences, coming up tomorrow or Friday when we get the jobs report. Normally today we would get, being Wednesday, we would get the ADP, but as I indicated yesterday, that won't be out for maybe a few months. Because they are retooling their report. They decided to pull back. So tomorrow will be the initial jobless claims, and then Friday will be brought to you by the Bureau of Labor Statistics. So that will be the big one for this week. So right now we are again. Here's the yields. Yields spiked a bit. They're back up to 2.91 now, after being down earlier in the day. But they did spike a little bit as a result as well. So lastly take a look at what's the average rate for conforming loan limit in the U.S. These are a day delayed, so these won't be. So these negative pricing today is not going to affect this until tomorrow. We'll see that tomorrow, and they do have points built into it, so it's not a. That's why you don't see the 1/8 increments in these. So the 15 years at 4.84, and the 30 year is showing at 5.5%. Again, these are average rates. If you guys want a rate quote, please feel free to reach out. We are here to help you guys out. In the meantime, again, if you guys got questions, please reach out. We're here to help you guys out. And if you guys can do us a favor, like and share these videos. We'll greatly appreciate it. Help our channel to grow. And thank you so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.